All right, so let's dive into it today. We'll take a look at Bitcoin and do some deep dives on what market conditions might need to take place for us to really start to see some maybe new scenarios resolve in the markets for Bitcoin and a handful of other tokens. We're going to get into this today. It's going to be fun. My name is Paul Vera. Welcome back into Tech Path. Joining me today is Mr. Greg Foss. We've had him on the show before and always love to welcome you back in. Great to have you, Greg.
Thank you so much. It's great to be here.
Greg, you as we said in the pre-show, it seems like you're always traveling out there. It must be, the Bitcoin life must be good for you right now.
Let's be clear. I pay for all my own trips. I just got back from Jackson Hole, Wyoming, where we had an amazing Bitcoin ski summit. You know what? I'm very passionate about this ecosystem, Paul, and you happened to get me the first time I was in El Salvador for the Bitcoin Beach. I've just been to Jackson Hole, and now I happen to be in close enough to you. I'm in Naples, Florida, and there's a Bitcoin community down here in Naples, Florida that I enjoy. I've spoken at a Bitcoin Day in Naples, but I'm cool. I'm here. I'm here not really on business this time.
Good for you. Well, everybody needs a little relaxation. Hey, let's get into some serious stuff, and that is Silvergate Bank. I want to go to this first tweet right here. The thread, obviously, Silvergate announced its intent to wind down operations and enter voluntary liquidation on this after it evaluated its status. When you look at this, you being in the industry, you've been on this side of the game before. What do you make of this, and how big of an impact do you think this will really make on the markets in general, crypto markets, Bitcoin markets?
Yes, so let's start by saying that Silvergate is not a systemically important financial institution, or SIFI. So its voluntary liquidation is not going to be viewed as a systemically important event. There will be no bailout. If this was a systemically important institution, that I know we're going to talk about some of them at the end of the show, there would be a different reaction. But so it's unfortunate as on-ramps are being choked off. Certainly, I've met the CEO of Silvergate. I had respect for his business model. That being said, it was a small bank, and it will be inconvenience for the onboarding of digital assets and the facilitation of changing those assets between stable coins and whatnot. But I'll put a different spin on it. This is why you own Bitcoin, because the banking system in general is over levered and has or another way of saying that is undercapitalized to the true risks that the commercial banks are exposed to. And we could get into a lot bigger conversation about that later, but this is inconvenient for digital assets, certainly. I just saw a Wall Street Journal headline that flashed across that the four largest U.S. banks today have lost over $47 billion of market capitalization. Right. Okay, the banking sector is getting creamed today, and the reason it's getting creamed is likely concerns about the credit quality of their balance sheet. And when you're 25 times levered or more, which is what the typical commercial bank is, if the loan values on your book go down by more than 4%, you're insolvent. Okay, you have a book value of equity that's negative, and this happens regularly. But the funny thing is, too many people own bank stocks for the safety of the dividend. It's part of the Fiat Ponzi, Paul. So sure. Silvergate Bank is a mosquito on the arsehole of an elephant. Like, we don't really care, but there's a bigger thing at play here.
Yeah, for sure. And we've had many conversations. I just had an interview today with a IP attorney, and we get into the whole scenario of what's happening with the SEC and the positioning of how the SEC is really kind of bellying up to the bar with other banking industry interests right now, which of course we see that playing into kind of the regulatory guidelines of how this plays out. Do you know much about Caitlin Long's bank and what they were trying to do with Custodia in trying to enter the market? Do you know anything about that?
I do, but not enough probably to comment. I prefer, to direct questions directly to her. I have a lot of respect for Caitlin, and I know the frustration she's gone through with SEC non-approval, or regulatory non-approval, I should say. But I can't talk specifically. I saw a tweet from her today. I'm a fan of the her strategy and the state of Wyoming and everything that they're doing in Wyoming. And I also understand that there's interests that don't want those efforts to succeed. So prefer just to stay away from that right now, if you're okay with that.
Yeah, no problem. It was just the point of getting that there are several banks that have attempted to go the right route of being
Correct.
able to get approved. And obviously, Caitlin Long's bank, Custodia, ran into the problems last quarter. And of course, she's mentioned this on several of the podcasts out there to this effect of why there might be some additional scenarios. Okay, so not getting bailed out, Silvergate, likelihood of liquidity events, and we've already seen a little bit of the flash crash last week that occurred with Bitcoin ETH and along many other assets. Do you think that has any major effect on Bitcoin acquisition from a liquidity standpoint market-wide, or do you think we are past that right now?
No, there's definitely impacts. It makes it more difficult. That being said, here's the crazy thing. It actually makes Bitcoin more intrinsically valuable because Bitcoin is your insurance against the fiat Ponzi and the commercial bank Ponzi. Having spent my 30 years in finance, starting at a commercial bank where I went in, okay, here's a story perhaps I haven't told you on your show, and if I have, forgive me for repeating myself. My first job coming out of Cornell University, I came back to Canada after doing an MBA in Cornell, and I have an engineering undergrad, and so I'm good with math. My first job in 1988 was working for the CFO of Canada's largest bank. That was the Royal Bank of Canada, still is Canada's largest bank. I was working directly for the CFO on the Latin American debt crisis. And the Brady Plan solution had come out for Brady bonds, as Brady bonds to solve the Mexican portion of the Latin American debt crisis. And I ran a quick back of the envelope calculation on Royal Bank of Canada, and it was insolvent, okay? Canada's largest bank was insolvent, which means, again, for your viewers, if you mark to market their loan losses that they would have had to take on their Latin American debt, the book value of equity would be exhausted. It would be negative book value of equity. And I went to the CFO and I said, Emil, we have a big problem. And he said, I know, don't tell anybody. Hey, hold on.
Okay.
Yeah, no. Yeah. Don't tell anybody. Hold on. Canada's largest bank has negative book value of equity on a mark-to-market basis, and a 25-year-old kid's not. I agree. I'm not supposed to go to the Wall Street Journal. And then if you think about this, every single other bank in the world, major money center bank, was in the same situation because the Brady Plan, U.S. Treasury Secretary Nicholas Brady, was not doing this to rescue Royal Bank of Canada. He was doing it to rescue Chase Manhattan, JP Morgan, Bankers Trust, all the other money center banks that had lost more than 4% of the value of the loan because the debt was trading not at 96 cents, it was trading at 25 cents on the dollar. Now, there's other loans that hadn't lost the 4%, but on a blended basis, the book value of equity of Royal Bank of Canada was vaporized. This happens on a regular basis. This is why banking is inherently a very risky business because it's so levered. 96 cents of every dollar that you lend is depositors' money or subordinate debt. If you lose that 4% on margin on the loan, meaning the price of the loan goes down by more than 4 cents because of default risk concerns, kaboom, it's over,
You're
Paul.
out of business.
And this is well, it's not out of business because these banks are too big to fail. The state will step in and bail them out.
Yeah, for sure. Okay, so with Silvergate, not that kind of scenario playing. It's, as you said, it's kind of a mosquito on the behind of an elephant here. But you look at the size of the market in general and what kind of effect this may have going forward, at least in the crypto markets. I was kind of looking at this tweet right here by Ben Cowan. He said, total market cap of crypto. Some people look at this as kind of get fearful. Others see this big opportunity. And he kind of hovered across something we've showed here on the show before, this little cheat sheet. It's kind of fun to see this chart.
Okay.
That's an actual chart of markets, psychology of market cycles. And it is so weird that the current Bitcoin and market, the overall market charts line almost up identical, meaning in this particular scenario, we could see a little bit more downside right before we start to see a market correction going forward. Looking at what Powell has said here recently, kind of backtracking himself after his FOMC disinflationary, lovely statements, and then has come back with this recent testimony, kind of backtracking this up, looking at what the current market is. How does this play out for you in the overall crypto markets, but more importantly to Bitcoin over the next year?
Yeah, so again, I'm a Bitcoin, I focus on Bitcoin in the digital asset space because I'm a fiat minimalist, okay? Like fiat is the Ponzi, and Bitcoin is the only digital asset, decentralized digital asset that addresses the fiat Ponzi, in my opinion. So fixed supply, definable supply, and then most importantly, decentralized, all right? So I focus on Bitcoin. This just makes Bitcoin more valuable to me as financial market risk increases. Bitcoin becomes intrinsically more valuable to me, but does it mean that the price follows my intrinsic valuation? No, because it's traded by Wall Street algos and 25-year-old Ivy League cucks who come out of schools like Cornell, my alma mater, and know sweet FA about how to properly manage risk, okay? So they correlate Bitcoin as a risk asset when in fact it's not. It's insurance. It's exactly the opposite of a correlated risk asset. But don't tell that to the 25-year-old Ivy League cuck who comes out of Cornell after paying $200,000 for an education that he doesn't know how to manage Wall Street risk. Like, go, pound sand, okay? This is the problem, but over time, they will come to learn.
Yeah, I love it when I get you on the show because there is one thing I would say. I would put you up there maybe in the top 3 of passionate people about Bitcoin.
I've seen so much garbage. It started with 1988 when I wasn't allowed to tell anybody that the largest financial institution in Canada was on its way to bankruptcy. I would have caused a bank run. No one would have believed me to begin with. All you have to do is do the math. So don't forget, I've seen the LDC crisis. I've seen long-term capital management. I've seen the great financial crisis. I saw the COVID crisis. And right now we're hitting number 5. And this one could be the biggest one of ever. Why? Because we have an idiot lawyer who is running the Federal Reserve and does not know what the heck he is doing. Okay? He doesn't understand.
I think that's clear now.
Yeah.
Look, clear now.
Inflation's transitory. Inflation's not transitory. Inflation's going to be higher for longer. Interest rates are going to be higher for longer. This guy is it's like herding cats. You cannot put his thought process. His thought process changes every single, for every opportunity. That is extremely dangerous. And the markets are doing the appropriate thing, which is reining in their risk.
Yep. Yes. They're adjusting. For sure. Here's a quick note, because I think Siegel would agree with you. This is just a quick clip on this very issue of the Fed policy. Let me play this for you.
The Fed policy is very misguided. Let me tell you why. This month is the 3rd anniversary of the COVID crisis, March 2020. Over that period, wages have gone up less than inflation. It's hard to argue the wages are cause of inflation when they've gone up less than inflation. By the way, through history, wages usually go up 1% to 2% a year above inflation. So workers are way behind where they normally are over the last 3 years. But more importantly, Jay Powell himself has said there's a structural shift downward in the labor supply. Well, listen, Economics 101 says if there's a reduction in supply, we have to increase the real wage to clear the market. I mean, it is not the job of the Fed to offset a supply side shift. They control aggregate demand. So I think they're focused just on how tight is the labor market. Suddenly a maniacal type of a focus is the wrong way to go about it. Look what's happening to prices.
There's 2 issues. There's what you
Siegel is as passionate, I think, as you are about this very issue about where the Fed stands. and how this
Well,
plays
here's
out
the
into
cool
the
thing.
market.
Can I? So I heard Andrew Ross Sorkin in the background. He's going to take the other side, of course. Now,
Oh,
Andrew
for
Ross
sure.
Sorkin's also a Cornell grad, but Andrew Ross Sorkin is soft as, molasses. Okay, he's a soft reporter. Jeremy Siegel, who's another good Ivy League guy, Wharton School. Okay, he calls it out, and he doesn't care because he has enough, political capital, or he's earned his capital on the street. Very
Right.
smart man. He's calling it out. So here you have two guys, one who's soft as a marshmallow and another guy who's calling it out. And I'm on Professor Siegel's side here. You got to tell the truth, okay, Paul? The
Yep.
people that are suffering right now are the future generations, our children, who, we're stealing, we're pulling forward gains that should accrue to our children because we're soft like a marshmallow. We're soft like Andrew Ross Sorkin. He just doesn't get it, and he wants everyone to, pander to his entitlement right now. That's just awful. It makes me upset that he's a Cornell grad, but you know what? You got good and others.
You always get good and bad with it. All right.
Yeah.
The likelihood now that the Fed is going to put the hammer down again after pulling a 25, going in with a 50 basis points hit, potentially now raising up to a percentage of possibility at 75%. This was pretty intriguing. Markets now see a 36% chance that we could go to 5.7 or 5 or higher. This by far the most hawkish shift in expectations that we've seen. This could be a problem rolling into the near future, but do you think this has any effect on the overall markets, really?
100%. Look, something is going to break, and I'm going to predict what it is, and I think we're going to get to that on your show.
Mm-hmm.
But today was a horrible day for banks. Listen, as soon as the financial system stops working because confidence is evaporating in the financial system, the Fed can raise and ensure a cataclysmic explosion, or they can take their foot off the gas or the brakes as they always do, start quantitative easing infinity, which the mathematics require because of the debt spiral that they put us in. And fiat debasement is the error term. You just need to print more money to solve this debt spiral. And Powell admitted it the other day.
Oh, for sure.
He admitted it.
Yeah.
Okay, so here's the problem. You cannot suck and blow. You cannot suck and blow, okay? Either pick one side or pick the other, okay? And he makes me friggin' sick, this kind of unilateral lawyer speak garbage BS. It's just, I'm passionate. Why? I have 3 kids, Paul. This is bullshit for the future of the children.
Yeah. And I think you're hitting on all the points. I usually try to do this a little bit more politically than that, even though sometimes I say it, hey, listen, the gig is up. We know the fix is in here. We understand this. The good thing is that a lot of people that watch our show, they already understand this. I mean, to a certain extent. The key is we're trying to give them ammunition so they can go out, get their friends, relatives, and people around them in their own circles to understand what's really happening in society right now. And we are seeing a fiat shift. The question will be is how far down the line do we see that true fiat shift occur? What is your theory on this, Greg? I mean, you look at where the banks are in the US, the position of the United States against what's happening in Europe. You look abroad of what's happening in China and in Asia. How long before the US loses the world reserve currency scenario?
I cannot tell you, because and by the way, that's not what I want. Okay, let's be clear about this. I want the US to remain global currency or global reserve currency. US treasuries as global reserve asset, I think, are going away. I think it will be replaced by Bitcoin, global store of value. But a global reserve currency, fiat currencies are good for certain things. They are not good for storing your value, but they are good for international trade and things like avoiding barter, right? Fiat currency, international trade is important in the global economic development. Fiat currencies are good for that. People need to understand the difference between a reserve currency and a reserve asset. So US Treasury debt could be the most foolish long-term bet I've ever seen in my life, where people are lending money to the US government for just under 4% for 30 years. Think about the debasement on that $100 that you've lent for them for 30 years. You may well get your 4% coupon over the entire life. It's not certain, but it's highly likely. But what will your $100 be worth in 30 years? I promise you the value of that $100 will have debased more than the 4% coupon you've earned compounding over those 30 years. It's always been that way. It's only mathematics, and it's because we have built up a debt stack that is unsustainable unless you continue to print money. That's where we are. I like to say it's grade 11 math. So when will it happen? I cannot tell you. I don't want it to happen, but my guess is it's 10 years or more into the future. But here's what's not 10 years or more into the future. The failure of other fiat countries that have the same economic challenges or debt challenges, but they don't have the global reserve currency. So they will fail. They happen all the time. And here's the worst part. Canada, my homeland, which is a G7 country, is less important than California. It has a lower GDP than the state of California. And it will fail at least 10 years before the USA fails. But if Canada fails, as the United States' largest trading partner, don't you think that might have an impact on the USA as well? So these are contagion effects that go forward. I don't predict this to be tomorrow, next year's business. However, slowly then suddenly, right? These cascading of these counterparty risks and everything, things happen quickly, slowly then suddenly. So you better own your fire insurance when it's cheap to own your fire insurance. Don't try and buy your fire insurance when the forest fire is right on your back porch, okay? That's the wrong time to buy your fire insurance.
Yeah, for sure. And if you look at kind of just the stance of where Bitcoin's potential is in the near future, here was a breaking piece right here. U.S. court likely to overturn the SEC denial of Grayscale spot ETF. This could change things. If we see this actually come through, is this a good thing or a bad thing for Bitcoin in general? How do you think the market will respond?
Positively. It's good for Bitcoin as an on-ramp for traditional finance that doesn't understand the not your keys, not your coins adage. But having come from Canada and being part of a company that brought the first closed-end Bitcoin fund to Canada, and then that fund was the precursor to a spot ETF, Bitcoin ETF in Canada, I'll tell you that the demand was over the top for an ETF. And if you do you take Canada, and it's a pretty small country relative to the USA, and you multiply the Canadian results by 10, because that's generally the rule of thumb. Canada's GDP is 1/10 of the USA. Canada's population is 1/10 of the USA. You multiply the results in Canada by 10, you could see $100 billion flow into Bitcoin in a very quick amount of time, because 10 billion flowed into the Canadian ETFs in a very short amount of time.
Yeah, so a 10x potential here. I just wanted to show this chart. This was a gold ETF. It was the first gold ETF that happened. Yeah. And as you can see, it happened around 2003. Right there it was 2003, first introduced. There's the market impact right there of a new ETF onto the scene. Then you look and see the kind of the Bitcoin price of where it potentially is right now. This is exactly to your point. We could see unbelievable gains.
Let's make sure that. So what I'm not predicting a tenfold increase in the price of Bitcoin, but if 100 billion flowed into the U.S. into an ETF in the USA, and the market cap of Bitcoin right now is less than 500 billion. It's actually less than 400 billion. Well, that's 25%. Hey, not gain. This is 20% funds flowing in. The gain could be far more substantial. But it still doesn't matter, Paul, because Bitcoin is so cheap. Even if Bitcoin were going to go up to a price of 200,000 right now, it's still the cheapest form of fire insurance on fiat that exists. So even at 200,000, Bitcoin is silly cheap relative to its intrinsic value.
You got John Deaton saying, after listening to the oral arguments, I remain confident predicting the Grayscale's victory over the SEC. Judge asked a lot of questions critical to the SEC's reasoning. This is something that is surprising me, is that we're seeing almost win after win, and I say this softly and not necessarily in winning a court case, but winning positions, which always lead to at least a better outcome probability for a court case. Do you think that the judges are finally getting to the point of saying, listen, we understand what's going on here. We got enough information. You guys are absolutely trying to basically favor the incumbents here. This is going to happen.
Listen, we had to take the Ontario Securities Commission to court in Canada to win the right to launch the closed-end Bitcoin fund in Canada that eventually became a Bitcoin ETF. So I was on the Spaces, Twitter Spaces with John yesterday, and I believe it was him that made the statement, you have to win in the courts rather than winning by regulation. And he also made the statement that generally the courts, the SEC is not good in the courts, or the regulators are not good in the courts, because it becomes very apparent that their arguments are quite flimsy. So I like his style. I've seen it happen in Canada. I didn't think we had much of a chance of winning in Canada, but we did beat the OSC, the Ontario Securities Commission. Now, it's a little different than the SEC, but a securities regulator is a securities regulator. I'm hoping he's right, because everybody needs this on-ramp for exposure to their insurance policy.
Exactly.
I like to think of Bitcoin as a insurance policy against the default of all fiat currencies in the world, okay? And that includes the USA. But so many other fiats are going to fail before the US dollar does. You have to understand that it's against a basket of fiat currencies. All fiats will fail. The USA will just be the last fiat currency to fail unless they get their act in gear. And what could they do, Paul? Yes, that's right. They could put
CFTC.
Bitcoin on. No. They'll put Bitcoin on their balance sheet. They'll own Bitcoin as a reserve asset. And there's a young man, and I'm reading his book right now. I'm going to show I don't want my thing. This is Jason Lowry, a young man who. Okay, I'm reading the book right here now. I don't want this to fall over, but the thing is going to fall over. Look at this. This is his thesis.
Yeah, it's software. Yes.
Okay, look.
This is the guy that was doing the all of the consulting with the U.S. government on how and what the strategic inflow.
Yeah. Okay. So let's be clear. A novel theory on power projection and the national strategic significance of Bitcoin. A thesis by Jason Lowry. He's a major in the U.S. Air Force. He is writing this thesis for his MIT graduation. I'm proud to call him a personal friend. I've met him a number of times in the Boston area. Now he's down at Cape Canaveral. This is one of the most important books I've ever, and I'm not completed it. It's unbelievable what this does. And if this gets read by the proper powers that be, because he's pitching it to the President of the United States as well as the Joint Chiefs of Staff, this could change the outlook for America, and that's what I want, okay? I want an America that continues to be the bastion of freedom for all of the free world, that understands that Bitcoin is not necessarily just a monetary system or technology. It's a system that protects information and the projection of information, the protection of information, and why this is so important. In fact, his thesis just blows my mind. Now, there's some people that say, oh, he's a warmonger. No, he is not. He's an anti-warmonger. He is trying to get USA to adopt Bitcoin to stop kinetic warfare and turn it into a cyberspace warfare. And he believes Bitcoin, that proof of work, Bitcoin, is already the system that will ensure the USA maintains its global dominance. I hope his message gets through to the powers that be. But I do have, since people know that I'm a friend of his, I have had senators of the United States reaching out to me to get in touch with Mr. or Major Jason Lowry. Proud to call him a friend. He's trying to educate people. And that's where it all starts. Educate the public as to the truth of proof of work versus proof of stake.
Yeah, this is so weird that you bring this up. We have a private mastermind group, and they often ask me, because we mentioned the Fiat scam that's currently underway, and they asked me, well, hey, what are some books to read? And I was referencing Jason's book just last week. So if you guys want to find it, you can you can catch this out there on Amazon in paperback form.
It's a number one bestseller in a number of categories. I'm really proud for the kid, and everyone's saying, oh, he's trying to make money. You know, he won't make any money after all of the expenses are paid and everything. What is most important is this thesis gets in the hands of a population that can, you know, think of different arguments perhaps, and at least educate. Now, one of the things that I, as a risk manager my whole life, always read information or research that is counter to your thesis, okay? Mm-hmm. Don't read research that backs up your view and then tells you how smart you are for taking this particular view. Read research that is counter to your view. So this is to all the Bitcoin haters out there. Please read this thesis and understand why potentially this could be the most important book written for the national defense of the USA. Other good books, look, Saifedean's The Bitcoin Standard and then the Fiat Standard. Those two books are absolutely, you got to read those. But this is a step higher. This is about national security. This isn't just about the Fiat Ponzi. So
this gets into it gets into a lot of themes around what we talk about here on the show, is that the United States is falling behind both on innovation, but also in understanding what these digital assets and the shift that's underway globally, because what's happening is we're seeing a lot of countries now starting to position, as you mentioned earlier, as we start to see some of these mid-size to rising star countries lose their currency and fiat standard, we're going to see them shift to something else. The unlikelihood of them going to the dollar is real, and going and following in the footsteps of someone like El Salvador and Mr. Bukele and jumping right into Bitcoin. Last topic I want to hit you on, and that is the CFTC chair now calling Ethereum a commodity. Obviously, CFTC already handling the legislation and or regulation of Bitcoin. This, of course, is in contrast to what's happening with Chair Gensler. What do you think about this? And does any of this, when you look at the ETF potential, you look at the CFTC jumping in and saying, hey, we've got securities here, commodities here that can be governed, and we already have regulation. Do you feel like this is going to give us a bit of a run, possibly maybe launch the bull run when this starts to shake loose?
Respectfully, I just do not know. And I'm not going to speculate on that because mine is such a longer term or a lower time preference, longer term view. Like I'm trying to do this for a 20-year view, Paul. I'm doing this for my kids. I've probably said on your show, and if I haven't, I'm going to say it again. Look, I believe Bitcoin should be worth more than $2 million per Bitcoin in today's dollars, which means if it traded from 20,000 to 2 million, I'd be like, okay, finally the market gets it. And it's just such a large asymmetric opportunity. I'm not going to sweat the next $5,000 or $10,000 move in Bitcoin. Okay. When it can go up 100-fold from 20,000, that's when I'm going to start looking at it and saying, oh, okay, maybe the market's finally getting it. Other than that, I'll leave it to the Ivy League cucks who trade around Bitcoin as a risk asset and in their algos, and it's correlated to this and it's correlated to that until it isn't. Okay, and that's the big thing. Slowly, then suddenly. When Russia announces that they're holding Bitcoin on their balance sheet and they want to settle oil trades in Bitcoin, it's over. The petrodollar is baked.
It's done.
It's over. The USA can print energy. By having the petrodollar status, USA is able to essentially print energy. Do you think Mr. Putin likes that? And do you think Mr. Putin likes getting his US Treasury reserves frozen in the SWIFT system? No, sir. So he will move to Bitcoin. He's probably hashing Bitcoin to an extent nobody realizes right now in Russia. And once that happens, Jason Lowry's thesis is going to come to fruition. And if the USA doesn't catch up, I'm sorry, but it's over.
Yeah, well, that's the thing I keep saying is that we are in an innovation war right now with the rest of the world. And I think the rest of the world is starting to get the picture where we're over here diddling around trying to protect sovereign, scenarios within the banking industry and so on, which is causing these kind of scenarios to essentially play out. Let's get into it. I want to talk to you after the live stream today. We'll do something. We'll grab a little clip on this very issue of sovereign immunity, because this goes, we can go, I don't want to get into it right now because it's a very deep scenario that plays out with Russia. But I want to jump over to Credit Suisse. And you've got CTO Larson's jumping in here, says, crypto is risky. Yeah, okay. Meanwhile, Credit Suisse, probably the most trusted bank in the world, 166 years of track record, down 96.5%. Everything is risky is what CTR, we've had CTO Larson on the show before. But Credit Suisse, right now, potentially really starting to maybe be on the ropes. And I just heard this weekend from some very influential people that Credit Suisse is offering upwards of almost 7% returns. That always worries me when we see those kinds of offers to major liquidity operators out there. What do you make of Credit Suisse in their current situation?
It's over. Okay, they will fail. They will need to be bailed out. They are a systemically important financial institution with about $13 billion of market capital when they actually need at least 10 times that amount to properly capitalize their balance sheet. Okay, so this is the last, you're seeing a bank run occur in real time in the wealth management division of CS, okay? It used to be CS First Boston when I traded with Wall Street, but now they've taken the First Boston out of their name. They might have 196 years of track record or whatever it was. That's commendable, but they're horrible risk managers. I mean, you saw the disaster that happened in their prime brokerage group. You've seen crisis after crisis. They are horrible risk managers. They will be bailed out or bailed in. You know what a bail-in is? When the depositors lose their money and all of a sudden, like in Cyprus, that's what happens with the banking system. Now look, once CSFB goes down, Deutsche Bank will follow very quickly because it's just, it's dancing on the head of a pin as well. And these two systemically important financial institutions, how will they get bailed out or bailed in plus bailed out? Because of the counterparty risk that exists in the system. When you're bailing out Deutsche Bank, you're likely bailing out Goldman Sachs de facto because of all the counterparty risks between them. How does that happen? QE infinity, dollar debasement, queue up the standard record. So look, I don't want CSFB to fail. Why? Because the calamity that's going to happen will bring us right back to the global financial crisis in 2008, 2009. However, mathematically, it is over. They have nowhere near the proper amount of equity capital on their balance sheet to protect against the mark-to-market and drawdowns that exist on their loan and off-balance sheet portfolio.
It's well, this is one we've been watching for a while. We've done a couple of episodes on just Credit Suisse in general and the impact it could have on the global financial landscape. To your point, and to the one we make often here on the show, is we are on borrowed time right now with the current fiat system, and Bitcoin, in my opinion, is still pretty much the only answer out there. We're going to get to a poll. I think we got a poll, right? Yeah, let's take a look at the poll real quick, Greg. All right, it says, when will Bitcoin ETF be approved? Q2, 3, and 4. Looks like 4 is winning it, so maybe later this year we potentially. But a lot of people, with the exception of about 23%, do like it as getting approval this year. So
it's freedom.
Are you feeling good about
it?
Come
on. Did you know? Well, look, we have it in Canada. Canada lives rent-free in the attic of the United States, and we already have a Bitcoin ETF. Come on, boys. Get your acting gear. This is financial risk mitigation. This isn't financial risk enhancement. You are mitigating risk by approving a Bitcoin ETF. Was there any problem approving an ETF that invested in small cap tech stocks? No.
Exactly.
Guess what, though? That was
just
far
as
more risky. Oh, way more risky. And it wasn't insurance, whereas Bitcoin is actually your insurance. You should be allowing people to insure against your stupid fiscal policies and protect their wealth with the most secure and best asymmetric trade opportunity and investment opportunity I've seen in 35 years. It's that simple. So please do it for freedom.
For sure. For those of you that are following us, you're always asking about sentiment and how we track on the CPI. Make sure and check out the CPI. Just a quick peek into Bitcoin. As you guys know, last week we identified the liquidity hit that occurred essentially on the it was right there on March 1st, but it actually happened on March 2nd. But the dip that occurred right there was playing out. We continue to see a little bit of a downward sentiment. If you guys want to check out the CPI, it's very simple. Just go to paulbaronnetwork.com. You'll find us over there. We do have a really cool offer that we're going to drop in the comments below, where we've got a really great sale for you guys on all the memberships. So just take a look at those. You can get into the Diamond Circle, Power Index, Mastermind, all that good stuff. Let's get over to some questions real quick. Couple of statements here. Senor Crypto, the only risk with Bitcoin, not owning any. Would you buy your wife an ETF or a diamond? I'd rather have one, own the real thing, Bitcoin. I'm kind of curious, when you think about Bitcoin versus going into the ETF, I feel still that the ETF is just really for people who are not ready to jump into self-custody just yet.
Or people that like to see their asset exposure on one statement from their brokerage house that says, here, I have 5%. So I love that statement. The only wrong allocation to Bitcoin is owning zero. That's very smart. It's more risky. I say it all the time. It's more risky to own 0% Bitcoin in your portfolio than it is to have a proper allocation. My allocation is fairly heavy relative to my recommendation, but my recommendation is everybody. Every portfolio in the world should have between 5 and 10% of their portfolio in or insurance. Okay. And here's the funny thing. When they have 5% in it, Paul, it's like they forget what the other 95% of their portfolio is in, and they only focus on this 5%. Oh my God, it's up and down. Hey guys, it's fire insurance. Let's talk in 20 years. Do not focus on this in the short term. So that's my best advice.
Interesting stuff. All right, a couple other questions. Why would anybody pro Bitcoin want to arm the big boys to legally manipulate the price of Bitcoin? Do you think that
that's
with
wrong.
an ETF?
That's wrong. That's wrong.
Okay.
How, don't you think they could manipulate the price of Bitcoin easier through a futures-based ETF rather than a cash-based ETF?
Bingo.
It's cash settled. They could print as much money as they want and short sell Bitcoin in the futures market and cash settle it versus a Bitcoin cash ETF. So that statement is wrong. I have to take issue with that.
Yeah, no problem. Here's a good one. When will crypto decouple from the U.S. stock market? Do you think it already has?
Chris Pollard, great question. Look, whenever the Ivy League cucks start realizing that it is a risk-off asset, not a risk-on asset, okay? But until then, you are hostage to the stupid kids coming out of Ivy League schools, of which I'm one of them, okay? And my portfolio is 90% Bitcoin, LOL. I'm okay with that. But I'm not telling guys have to be 90%, because the greatest asymmetry of all time means if you're 10% allocation to Bitcoin and it goes up 100-fold, the rest of your portfolio doesn't matter. Guys,
exactly. Yeah.
And by the way, 90% allocation, I applaud you. Excuse me, but the big money will never go more than 20% into anything, okay? That's just the way risk is managed at the big asset managers around the world. So I'm trying to speak to the big asset managers. I applaud you, Jeff, for being a 90%. That's not my style either.
Interesting. Hey, Greg, it's always fun chatting with you. Thank you so much for stopping in today. We'll definitely get you back on the show for sure.
It's my pleasure, and I just want to applaud the United States for being still a free country. And read this book by my friend Jason Lowry, okay? This is unbelievable stuff, okay? I'm telling you, you need to read this, whether you like it or not, for the benefit of your children.
Yeah.
This is an unbelievable read.
It's a deep read, but it is a good one.
It's a deep read, and it's so important for strategic national defense, strategic implications. Okay, so thanks for having me, Paul.
You bet.
I feel like the Don Cherry. Yeah, Good day, my friend. Thanks a lot.
All right, guys. Of course, if you're not tuned in on the YouTube channel, make sure and jump over here. If you're on the podcast side of things, you're listening to this after the fact, you can always catch this stuff actually live. We do this most of the time at 3 o'clock every day, or right around that time. And we always have great guests like Greg and many others on for sure. If you have a guest idea that you want us to get on, make sure and drop some comments down below. We always love that. And like this video, it helps people discover what's really happening in these markets. And I think that's the biggest problem that many of us have, is really understanding where the shift is occurring. Of course, if you want to reach me, it's out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.